Hi guys, this is Shiva. Welcome to Trademark. In this session, we will talk about new and very famous indicator, that is Bollinger Band. Let's see some basics about Bollinger Band. It's very famous indicator and lot of people are using it for investing and trading purpose. We can also call it as volatility band. It was developed by John Bollinger and also he wrote a book called Bollinger on Bollinger Band. I surely recommend it to read. Okay, the purpose he invented this indicator to find oversold and overbought areas. And personally, I also like this indicator very much because I learned very deeply in this indicator. Okay, let's understand about what is Bollinger Band and how to apply it. Let's see how to apply Bollinger Band in chart. Go to TradingView software. In every trading software, this indicator will available. Next, in indicator, type Bollinger Band. Next, go to setting. Length is 20 default, means 20 SMA, 20 simple moving average. In standard deviation, 2 default, no changes in that. Okay, let's see why we took 20 SMA and 2 standard deviation. These both lines are 2 standard deviation. Middle line is 20 SMA. Okay, in previous video we discussed how 20 SMA plays key role in market and how it will act as a support and resistance, and mainly I said it will also act as a mid band. 20 SMA is a mid band to the price. That's why we select it and I explained very deeply in this video. It's very useful one. Okay, this is standard deviation. In school days we learn this standard deviation, mean value and all in maths I think. Okay, now take 20 SMA as a mean value. Here we need 2 standard deviation. So we need to add plus 2 from 20 and minus 2 from 20. From 20 SMA we take plus 2 and minus 2. We get both lines like this. You may ask why we need to take only plus 2 and minus 2 from 20 SMA. Why not plus 3 and minus 3 or some other value? Okay, I will give clarity on that. This is standard deviation. Everything in the world is divided in this standard deviation only. How? I will give some example. Then only we can understand clearly. Standard deviation means if I measure height of the 1000 people, what would be the average height of the 1000 people and below average height of the 1000 people. Let's see. So maximum people comes under this deviation, 5 to 5.5 under this height. So 68% will comes into this category. Next 4.5 to 5 comes under this deviation. It's 26%. Now add 26 plus 68 is equal to 95%. So 95% of the people will comes under this 4.5 to 5.5 height. Next, in rare cases, very short or very tall like below 4.5 or above 6 feet, that will comes into 4%. And next, in very exceptional like 1 in million, you will see that very short or very tall people, it comes 0.2%. So most of the people comes under this 95% category. Same thing applies for everything in our life like height, weight, cars, income, everything comes under this bell curve only. If you listening this concept first time means you will feel amazing, no? See how beautiful knowledge is. Okay, in market also we use this formula. So this 2 standard deviation comes under 95% category. When it goes outside the band, it indicates volatility signal. I am repeating that when it goes outside the band, it indicates volatility signal. Okay, look here. If I type 1 standard deviation, band comes near to 20 SMA. Wait, I will mark. If I type 3, it goes too far to 20 SMA. It comes here. If I type 2, it comes here. Okay, listen carefully. In 1 standard deviation, look at price keeps on going out of the band again and again. In consolidation time also, it's try to moving out of the band. See, in 1 standard deviation, there is 68% chance that the price will stay inside the band and 32% chance that it will be go out. Let's see 2 standard. I will remove 1 and add 2 standard deviation. In this 95% price fit into this zone. Only 5% chance it is moving out of the band, means only volatility time it is moving outside. Now let's see 3 standard deviation. Look here, price moving out very rarely, because 99% price stay inside the band. Very rarely it moving out. If you think 99% is very good, then we can't find when market will volatile and when market will consolidate. So 2 standard deviations gives perfect signal. Look this one, consolidating. Next, when volatility time, price touching upper band, perfectly moving. So 1 standard deviation will give us many signals. 3 standard deviation will give us very rare signals, and 2 standard deviation gives perfect signals. That's why we use 2 standard deviation, and it will work like magic. We can call this upper band or upper envelope, middle band as a middle band only, lower band or lower envelope we can call. These areas we call it as volatility market. Now we understood that volatility means when price moves above upper band or lower band continuously, then we call it as volatility market. I will show some examples. Look this, here price moving above upper band, so we consider as volatility market? No, I said price should cross upper band or lower band continuously, then only we consider as a volatility market. This one is fit into volatility, and this one also. Before breakout, market makes consolidation, squeeze, means it's very good sign. Mark these words. This is squeeze zone, also we can call consolidation period or sideways. When sideways market, upper band will act as a resistance and lower band will act as a support. It's $1 million word, don't forget. In sideways time, upper band will act as a resistance and lower band will act as a support. Look at this, in consolidation time, Bollinger band moving straight line like railway track. At consolidation time, mark horizontal line or draw rectangle like this. Next, wait for breakout. This one is alert signal. Price breaks rectangle and upper band. We can take entry at alert signal at here. Stop loss below this candle. Target next resistance or height of the rectangle, or we can use trailing stop loss. And one more very important point, never use Bollinger band alone for confirmation. We need to add some more confirmations like price break rectangle with Bollinger band, squeeze opens, double confirmation. With double confirmation, RSI cross 60 means it's triple confirmation. After triple confirmation, volume also gives signals. It's sign of big bulls are showing some interest. So we get 4 confirmation. Like that, we will check 8 to 10 confirmation. Then only we will take entry. For suppose if RSI cross 60 confirm, plus MACD gave signal confirm, plus stochastic gave signal confirm. If you think it's triple confirmation, that means you are on the wrong way, because these 3 indicators give one signal, that is momentum only. So don't get confused. I made a clear video on indicators, that which is the most successful indicator that works in the market. That video is really game changer for your trading journey. I will try to provide link in description. Okay, let's see some more examples of consolidation plus breakout. This is consolidation, this is breakout. Next one, this is long consolidation. And one more $1 million advice, longer the squeeze, stronger the move. Very important nugget, longer the squeeze, stronger the move. This is very good breakout and gave very good potential. Okay, and finally I would say, only by watching videos nothing will improve. You need to backtest. You need to backtest compulsory. If you backtest more, your confidence will increase more. Whichever indicator you like, select it, learn deeply into that. Next, backtest, then apply. This is golden mantra. Don't bother about time frame. It depends on how long you participate in the trend. I already explained clearly in previous video about time frame rules. Okay, I think you learned a very important indicator with very good concept in this video. In further classes, let's learn more deeper into this Bollinger band like volatility divergence, fake breakouts, Bollinger band walk, in squeeze time, whether writing options or buying option is good, and some other very important factors we can learn. That's it guys, see you in next video. Jai Hind.